Hello students, welcome to the lecture on trial, balance and rectification of errors. And after this lecture, we will be able to learn the following objectives. Explain the concept of trial balance. Elaborate on rectification of errors. Define a suspense account. Let's start with the concept of trial balance and rectification of errors. A trial balance is an internal report that will remain in the accounting department. It is a listing of all the accounts in the general ledger and their balances. However, the debit balances are entered in one column and the credit balances are entered in another column. Each column is then summed to prove that the total of the debit balances is equal to the total of the credit balances. However, it may happen that the total of the debits is not equal to the total of the credits in a trial balance, which indicates that there are some errors in the records of transactions. Such errors can occur at any stage of the accounting process, such as recording, classifying and summarizing of financial transactions. The accounting errors can be classified as errors of omission, errors of commission, errors of principal and compensating error. It is essential to identify and rectify the errors of accounting to ensure the accuracy of financial records, as these records are used further for preparing financial statements. The correction of errors in the books of accounts is known as rectification of errors. Trial balance is a list of closing balances of ledger accounts on a certain date and is the first step towards the preparation of financial statements. It is usually prepared at the end of an accounting period to assist in the drafting of financial statements. Ledger balances are segregated into debit balances and credit balances. Asset and expense accounts appear on the debit side of the trial balance, whereas liabilities, capital and income accounts appear on the credit side. If all the accounting entries are recorded correctly and all the ledger balances are accurately extracted, the total of all debit balances appearing in the trial balance must equal to the sum of all credit balances. Let us now discuss the concept of trial balance. After posting transactions in a ledger account and balancing the account, a statement is prepared to show the debit and credit balances separately. Such a statement is called a trial balance, which is prepared by using the debit and credit totals or balances of all ledger accounts to determine the arithmetical accuracy of the recordings of financial transactions of a business. M.S. Koswar defines trial balance as a statement containing the balance of all ledger accounts at any given date arranged in the form of debit and credit columns placed side by side and prepared with the object of checking the arithmetic accuracy of ledger positions. The balance of an account is the difference between the totals of the debit side and credit side. If the debit side total is greater, it is called debit balance. However, if the credit side total is greater, it is called credit balance. All ledger accounts showing debit balances are posted in one column and those showing credit balances are posted in the other. Under the double entry bookkeeping system, for every debit there is an equal and corresponding credit. Therefore, the total of the debit balances in the ledger must be equal to the total of the credit balances in different accounts. If they agree, it means that both the aspects of transaction are recorded correctly in the ledger. The trial balance is generally prepared at the end of the accounting period. Objectives of trial balance. The objectives of trial balance are making accounts arithmetically accurate. Implies that trial balance is prepared by matching the totals of debit and credit side that ensures the mathematical accuracy of accounts. However, matching of the debit and credit balance is not a conclusive evidence of the accuracy of accounts, as it only checks if the debits and credits are recorded in equal amounts. Helping in locating the errors. Implies that if the trial balance does not match, it indicates that there are errors in the accounts. These errors can occur at any stage of the accounting process, such as while totaling of subsidiary books, posting of journal entries in ledger, calculating account balances, carrying account balances to trial balance or totaling of trial balance. Providing a basis for financial statements. implies that a trial balance is considered as the first step in the preparation of financial statements of an organization. It acts as a link between the accounting records and the preparation of financial statements. Summarizing all ledger accounts implies that a trial balance serves as a summary of all ledger's accounts and provides the complete picture of each account in the ledger. Methods of preparing a trial balance. The precision of recording in the journal entry and ledger posting is examined by preparing a periodic trial balance at the end of the accounting period. There are two methods of preparing a trial balance, which are: total method refers to the method in which the total of the debit and credit sides of ledger accounts, excluding the closing balances, is shown in the trial balance. With the help of this method, the trial balance can be prepared immediately after the posting of transactions from journal to ledger books. However, in practice, this method is not widely used as it does not ensure the accuracy of the balances of various accounts. Balance method refers to the method in which only the closing balances of ledger accounts, including cash and bank accounts, are shown in the trial balance. These balances help in summarizing the net effect of all the transactions relating to an account, which in turn facilitates the preparation of financial statements. With the help of this method, the trial balance can be prepared only when the balancing of all the ledger accounts is complete. This method is used by most of the organizations. Limitations of trial balance. The trial balance facilitates verification of accounts and preparation of financial statements. However, certain limitations. The limitations of a trial balance are: difficult to adopt trial balance as an evidence of arithmetic accuracy of the accounting records. Even if the debit and credit balances of the trial balance tally, it does not mean that the recording and posting of accounts are flawless. Consider as expensive because the concept of trial balance is based on the double entry bookkeeping system. Thus, it is hard for small-scale organizations and sole traders to adapt the trial balance. Fail to represent the fair and true state of the business if the final accounts are prepared on the basis of a faulty trial balance. Now, moving on to the next topic, we will study the rectification of errors. A trial balance is prepared to check the arithmetical accuracy of transactions recording in a journal, post them into the ledger and balance ledger accounts. If a trial balance agrees, it is assumed that recording, posting and balancing are done correctly. However, it does not agree, efforts are made to locate the errors. The errors in a trial balance may occur at the time of recording, classifying or summarizing the financial transactions. Even when the trial balance is correct, some errors may remain in the accounting records. For example, if the credit purchases are not recorded in the purchase book, it would not affect the agreement of the trial balance because entry is not made in either sides of the book. Therefore, the errors can be of two types, namely errors that affect the trial balance and errors that do not affect the trial balance. However, both types of errors should be identified and rectified. The process of rectifying the errors and correcting the accounting records is termed as rectification of errors. Errors of omission. An error of omission arises when a transaction is not recorded in the books of accounts, either completely or partially. Errors of partial recording of transaction are different from the errors of complete recording of transaction, as the errors of partial recording results in improper trial balance, but the errors of complete recording does not. For example, the recording of goods worth $1,000 purchased on credit from John Lennon is omitted from the purchase book. In such a case, it would be omitted from being posted in the ledger as well. Consequently, the transaction is not found in the trial balance. Thus, the accuracy of accounts is diminished. Therefore, it is quite difficult to locate such errors. These types of transactions are generally noticed when the statement of account is sent or received from the debtor or creditor. Such errors can be rectified by correcting the normal journal entry that was supposed to be made for the transaction, which is omitted. Errors of commission. Errors of commission arises due to wrong recording, wrong posting, wrong carrying forward, wrong casting of subsidiary books, or wrong balancing. Such errors may occur due to the negligence of the accountant and are clerical in nature. Errors of commission can occur due to following reasons: by entering a wrong amount in the correct subsidiary books, by recording a correct amount in the wrong subsidiary book. For example, Clark paid an amount of $15,000 to Rodriguez and the amount is correctly recorded in the cash book, but while posting to Ledger, Rodriguez's account is debted with $1,500. Such type of errors is termed as error of commission. Most of the errors of commission affect the trial balance. Such errors are rectified only by means of a suitable rectification entry. Errors of principle. The accounting transactions should be recorded according to the generally accepted accounting principles. When a transaction is recorded as an infringement of the accounting principle, it is known as an error of principle. Such errors do not affect the trial balance as the entry of transaction is made on the correct side of the account, but the value of entry or the amount of transaction is incorrect. The rectification of such errors is very important as they directly affect financial statements. Such errors may occur due to the following reasons: lack of discrepancy between the revenue and capital items. The revenue receipt may be taken as capital receipt or vice versa. Lack of distinction between the business expenses and personal expenses. Lack of distinction between the productive and non-productive expenses. Compensating errors. Compensating errors are those that are nullified by errors of equal proportion. It means that one accounting error is compensated by another error. It may happen that an error in an account is occurred and the same kind of error has taken place in another account. In such a case, it is hard to detect that error. For example, Thomas' account was debited with $1,000 instead of $10,000, while Smith's account was debited with $10,000 instead of $1,000. Therefore, Thomas' account, which was debited by $9,000, was compensated by another error in Smith's account, whose account was debited excess of $9,000. Such errors do not affect the trial balance. Locating the errors. When trial balance is prepared, there can be two possibilities: either the total or the balance tally or does not tally. If the balance does not tally, it indicates that at least one error has occurred. In such a case, the errors must be located and corrected before the preparation of financial statements.
Rectification of errors, depreciation on machinery. Now, before we get into the rectification stage, let us see what is the entry that you make in case of depreciation on machinery. So let's say you had depreciation on machinery amounting to 100. Okay, so whenever you have to provide for depreciation, now just to step back, a depreciation is basically the wear and tear which arises on asset due to usage. So what happens is that when you use a machinery, let's say for example you get a new machinery, okay, as you keep on using it on a year-to-year basis, the machinery is going to go down in terms of its use. So in order to capture this downside which is there in terms of the machinery, what we do is we reduce the value of the machinery by providing depreciation, right? Now machinery is what? Machinery is basically an asset, and we know all assets have debit balance. If you have to reduce the value of the machinery, you have to credit it, right? Because that's the way plus and minus works in accounts. To asset account, let's say the depreciation was 100, and what will you debit? You debit depreciation account. Depreciation is basically an expense, okay, and when you incur an expense, that is debited by 100. So this is the normal entry which you make for depreciation. Now let's see what kind of errors are possible here. The first error is you do no posting done, right? So what happened is you did not post anything in your ledger, which means what? Which means that this entry was not passed both for the debit and the credit. So simply what you need to do is just debit the depreciation account by this number 100 and credit the asset account by 100, right? Let's take second situation, not posted to machinery account. I've used the word asset here, but you can very well use the word machinery. Now in this case, what would have happened? You posted the depreciation part correctly, but you did not work on the machinery part. So now you need to do this posting. So what will you do? You will credit the machinery account, right? And that too by 100. And where does the debit go? Since this was not credited, so in the books when you prepare the trial balance, there will be a difference between the debit and the credit side, okay, which is always put it into the suspense account, right? So you will have basically a credit balance of suspense account. To counteract that, you will debit the suspense account here, right? So you have basically rectified the entry here. What if instead of machinery, the depreciation account was not debited? So let's say the third case is not posted to depreciation account. Big deal. We know very well that if it is not posted to the depreciation account, we now need to do that posting. So we will debit the depreciation account by 100 and we will credit what? Of course, the suspense account, right? So these are some of the likely errors that can happen in case of depreciation on machinery. Again, there could be further situations also, but they are not that ticklish, and because of the knowledge which you have gained earlier in respect of purchase and sale transactions, those should be manageable.
The errors can be located by implementing the following steps. Determine the summation of the debit and credit balances of the trial balance again. Determine whether the account title and the amount appearing in the trial balance are agreeing with that posted to the ledger. This helps in detecting the incorrect figures or omissions of an account. Compare the present year trial balance with that of the previous years so as to check if there is any unexpected increment or decrement in the amounts. Determine the accuracy of the balances of individuals' account in ledger by rechecking them. Let's know the meaning of suspense account. When a number of errors occur and the trial balance disagrees, it is difficult for the accountant to locate all the errors and rectify them. In this situation, the accountant introduces a suspense account in the trial balance to make it agree and proceeds further to prepare the profit and loss account and the balance sheet. The accountant manages to tally the trial balance by putting the difference between the debit and credit side on the shorter side of trial balance. The suspense account can be considered as the net result of one-sided errors. For example, if the debit side of the trial balance exceeds the credit balance by $1,500, then a suspense account with credit balance of $1,500 would be included in the trial balance. At a later stage, the books of accounts can be scrutinized to detect the errors. The correction of these errors is done by passing the journal entry in which the affected account is debited or credited. After that, the corresponding entry is made in the suspense account till the suspense account is cleared off. A suspense account is a temporary phenomena, as when errors are located, the relevant amount are transferred from the suspense account to the affected account. This tends to close the suspense account.
First of all, what is a suspense account? The suspense account is a type of holding account. When we prepare a trial balance, as we know, the debit and credit columns must equal each other. Despite our efforts, this may not always be the case. As a temporary measure, we enter the difference in the smaller of the two columns to make our trial balance balance. It is important to note this is temporary only, and we must then go away and find our errors and correct them. We can't leave the trial balance not balancing. The amendment we put in our trial balance is called the suspense account. And as we'll see in a few minutes, the suspense account looks just like a normal ledger or T account, if you're more familiar with that concept. A really quick example. Our trial balance on the 29th of February 2012 had a debit column totalling £234,600. Unfortunately, we had a credit column totalling £232,500. Thus, we needed to add a suspense account balance to the credit column for £2,100 to enable our trial balance to balance. Once we'd done that, our debit balances equaled our credit balances, which is what we want. And I've just illustrated that there with an excerpt from a trial balance. This is by no means a full trial balance. It's just meant for you to see how I've added in the suspense account. You can see there, and we've got purchases, sales, various other things, and we've got a credit on our suspense account column of our trial balance. A simple suspense account is there in front of you at the moment. It's a simple T account. And you can see there my entry I've put on the 29th of February. I've put a credit of £2,100, and I've just put the details there, difference in books, just so as we know whereabouts that transaction has come from. It's really important to note that our suspense account must always be cleared down to zero. As just mentioned, it is temporary only. Although we've opened a suspense account and therefore we've made our trial balance balance, we can't leave our accounts like this. When errors are found, we must correct them using our double entry system. Each correction must first have an entry in the journal, I'm sure many of you are familiar with journals, describing what we've done. And then we must post our correct entries into the accounts concerned. Well, we have a suspense account on our trial balance. We must always, and you can see there I've really highlighted that, find the error or errors and then eliminate the suspense account. Hence then we need to redraft an accurate trial balance. Sometimes it might be one simple error in our trial balance which has thrown it out. Sometimes there may be a series of errors, but it is important, even though we've opened a suspense account and balanced our trial balance, we must go back and identify where our errors have occurred in our double entry bookkeeping system.
The following steps should be adopted while rectifying one-side errors using the suspense account. Identify the account that is affected due to the accounting error. Determine the excess or short of debit-credit amount in the affected account. In case debit amount is in excess or credit is short, then credit the account with the exceeded amount of debit. On the other hand, if the credit amount is in excess or debit is short, and then debit the account with the exceeded amount of credit or short amount of debit. Complete the journal entry by debiting or crediting the suspense account as required. Now in the end, let us summarize what we have learnt in this lecture. A trial balance is an internal report that will remain in the accounting department. It is a listing of all of the accounts in the general ledger and their balances. The precision of recording in the journal entry and ledger posting is examined by preparing a periodic trial balance at the end of the accounting period. A trial balance is prepared when all accounts in the ledger are balanced. It is a simple listing of all general ledger accounts and their respective balances. A trial balance is prepared to check the arithmetical accuracy of transactions recorded in a journal, post them into the ledger and balance ledger accounts. Errors of commission arises due to wrong recording, wrong posting, wrong carrying forward, wrong casting of subsidiary books or wrong balancing.